In this video, we discuss the 4 key factors that could determine the future direction of the crypto market in 2023. Despite a promising start to the year, with many top coins up 30% to 50%, they still remain well below their all-time highs. To recover, certain catalysts must occur, including the launch of a Bitcoin ETF, continued institutional adoption, and regulatory clarity. If these factors align, we could see the crypto market surge back to all-time highs, making it an exciting time for investors. Tune in to learn more about what's in store for the crypto market in 2023. Number 1. The macroeconomic outlook. The overall macroeconomic outlook, particularly for the US economy, is crucial to the crypto market's performance. The Federal Reserve's potential rate hikes are a major concern for investors, and any further tightening could hinder the market's upward movement. The market needs to see a pause in rate hikes, and any signs of Fed easing would be positive news for cryptocurrencies such as Bitcoin. The consensus is that the crypto market will struggle to recover if the Fed decides to tighten further. Number 2. Institutional adoption. Institutional adoption of blockchain technology is a key factor for the crypto market. More use cases emerging for blockchain technology will boost the long-term investment value of many cryptos. Visa is looking into possible use cases for Ethereum to process payments faster and cheaper. Amazon recently partnered with Avalanche to offer blockchain technology solutions to customers via its Amazon Web Services, AWS, unit. This trend of institutional adoption could drive the crypto market forward. Number 3. Crypto as an asset class. Large institutional investors allocating more to crypto could have a strong positive impact on crypto prices, making it an important factor in the market. The partnership between BlackRock and Coinbase now makes it easier for BlackRock clients to invest in crypto, which is a significant development. BlackRock is the largest asset manager globally, with nearly $10 trillion in assets under management. This partnership could encourage other large institutional investors to follow suit and allocate to crypto. Number 4. The regulatory outlook. The regulatory outlook for cryptocurrency is a crucial factor in determining the market's direction. The absence of comprehensive U.S. regulatory framework has resulted in the SEC's taking the lead in regulating crypto. However, there is a growing concern that the SEC may be acting too aggressively and imposing restrictions on crypto growth. The market needs clarity and certainty from regulators, but overreacting lawmakers may call for stricter regulation, which could harm any potential rally. A clear and balanced approach is necessary for crypto to regain its previous levels. Which cryptos are most likely to succeed? In conclusion, the crypto market is impacted by a variety of factors, including macroeconomic outlook, institutional adoption, regulatory outlook, and more. Cryptos with proven utility and real-world use cases, as well as popularity with large institutional investors, are likely to perform well in the long run. While Bitcoin and Ethereum remain top choices for investment, there are other interesting crypto plays to consider as well. As the regulatory landscape continues to evolve, a certain amount of clarity and certainty from regulators is needed to ensure the sustainable growth of the crypto industry. Overall, the crypto market remains dynamic and exciting, with many opportunities for investors who are willing to do their research and stay informed.